Stocks are dropping as Treasury yields are popping. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all lower in today's session as Treasury yields spike after a hot May jobs report. The Labor Department reporting today the U.S. economy added 390,000 jobs last month. Now that was stronger than expectations for a gain of just 328,000. But it was still the slowest pace of hiring in 13 months as the labor market nears full employment levels. The unemployment rate was unchanged at 3.6% in May versus expectations for it to drop back to a record low of 3.5%. The labor force participation rate, meantime, stood at 62.3%, which is still 1.1% lower compared to pre-pandemic levels. Average hourly earnings did rise 0.3% monthly and jumped 5.2% year over year. And although strong, those wage gains are still lagging behind inflation. But the strong hiring numbers give more support to the Fed's plan to move ahead with an aggressive rate hike schedule, and that is pushing Treasury yields higher in today's session. Both the 10-year yield and the 30-year yield spiking sharply, and that rally in the Treasury market is pushing down Wall Street as stocks move inverse to yields. And even as the overall labor market looks strong, more tech companies are cutting back on hiring. Tesla shares tumbling in today's session following a report that CEO Elon Musk has ordered a hiring freeze at the company. Reuters reported that Musk sent an email to executives on Thursday, which was titled, "Pause all hiring worldwide." In that message, he reportedly said he has a, quote, super bad feeling about the economy, and they need to cut about 10% of jobs at Tesla. The company's annual SEC filing showed it had nearly 100,000 employees at the end of 2021. And Coinbase shares are also down sharply in today's session after extending its hiring pause as well. In a blog post, the company said that freeze would be in effect for the foreseeable future. Coinbase said it will also rescind some already accepted job offers. The company said it will help those impacted by that move with job placement and resume reviews. Company's chief people officer said, quote, "If we're flexible and resilient and remain focused on the long term, Coinbase will come out stronger on the other side." And the U.S. services sector did expand at the slowest pace since early 2021 last month. The Institute for Supply Management Services PMI fell more than a point to 55.9% in May. That was lower than expectations for 56.7%. And although any reading above 50 does still signal an expansion, it is the slowest pace since February of 2021. That slowdown came as business activity slumped nearly 5 points last month, while supplier deliveries also fell as the supply chain continues to be a problem for businesses across the country. And oil prices are rising today as supply concerns continue to weigh on the market. West Texas Intermediate crude futures rising nearly 2% to over $119 per barrel, while Brent crude futures are up about 1.8%, nearing $120 per barrel. Now, these gains come after U.S. crude inventories fell sharply last week. The Energy Information Administration reporting crude stockpiles tumbled by 5.1 million barrels, while gasoline inventories dropped by 700,000 barrels. That was sharply higher than analyst expectations for a 500,000 barrel drop in oil supplies and just a 100,000 barrel decrease in gas stockpiles. And U.S. gas prices are still on a record-breaking streak. A AAA showing the national average for a gallon of regular gas jumped above $4.76 today. That was an increase of nearly 5 cents overnight for the third day in a row. In earnings news today, though, Lululemon shares are following the broader market lower despite the company beating Q1 expectations. The athletic apparel retailer reported earnings of $1.48 per share on $1.61 billion in revenue. That topped analyst estimates on the top and bottom line. Revenue was up 32% year over year, and the company did hike its guidance. Lululemon now expecting fiscal Q2 revenue between $1.75 billion and $1.78 billion, with full-year revenue expectations between $7.61 billion and $7.71 billion. Both forecasts beat analyst estimates as well. And Apple shares are falling in today's session as the stock suffered its first death cross since 2018. Apple's 50-day moving average fell to $159.09 today, while the 200-day average is at $159.49. Now that crossover between the 50-day and the 200-day moving average is known as a death cross, and it's seen by some analysts as the spot where a shorter-term sell-off moves into a longer-term downtrend for a stock. This is the first time Apple has seen a death cross on its chart since December 20th of 2018. Stock is down more than 20% from its most recent record high in a bear market. And now I do have some personal news. This is my final Wall Report video. But don't worry, I'm not leaving T3 Live, and I'll still be working on other content, including my free daily newsletter. Sign up for that at the link in the description box. And if you want to continue getting video updates on the market and the latest economic data, be sure to follow me on TikTok. My handle is right here, over here, and join me. We're building a great community there on TikTok to learn about the market. Ask me your questions. I'll make specific videos about what you want to learn about. So be sure to follow me. Have a great weekend.